In merger arbitrage investing, there are several key documents we look for as investors. One of the first, and perhaps most important, is the definitive merger agreement, or the DMA. A DMA is a binding contract agreed upon by the buyer and the seller during the pendency of a transaction. This agreement outlines the terms and conditions that each party must abide by while they work to close their transaction. Some key items that we look for when reviewing this document include the terms of the transaction and its structure, regulatory and other conditions required to close the transaction, any termination fees that may need to be paid by either party if the transaction were not to close, as well as certain standards for how the companies will conduct their business while the transaction is pending.
Chris Matheson is a member of the Arbitrage investment team at Gabelli Funds. This podcast is an excerpt from Gabelli TV that appeared on April 9, 2025. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. The analyst's views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or of the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic, and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. For more information, a prospectus, or summary prospectus, visit our website at www.gabelli.com or call 800-GABELLI or 800-422-355-4914, 921-5100 fax, 914-921-5118 info@gabelli.com.